0 days to expiration options, commonly known as 0 DTE options, are options contracts set to expire at the end of the trading day. The term 0 DTE does not refer to a category of options, but indicates the remaining time until the contract's expiration. All option contracts, including weekly, monthly, or quarterly, will become a 0 DTE option on their expiration date. Essentially, any option traded on its expiration date is called a 0 DTE option. Traders often reference weekly options in relation to 0 DTE options. Weekly options were created by the CBOE in 2005. Initially, they had expirations every Friday except for when the standard monthly options expire. Over time, the exchange expanded the offerings to include expirations on Wednesdays and Mondays. Several securities now have options expiration on every trading day. You can visit the CBOE website for a current list of weekly options available from the CBOE. Weekly options have characteristics and features similar to standard options such as pricing, assignment, exercise, rights, and obligations. A noticeable difference between weekly and standard options is that weekly options have a shorter expiration cycle. They may share other characteristics with standard options. Standard options stop trading at 4 p.m. Eastern on the third Friday of the month. Weekly options are issued on Thursdays and expire on Friday of the following week unless Friday coincides with a standard quarterly expiration or a holiday. If there is a holiday on Friday, the weekly options expire on the Thursday before the holiday. Looking at an options chain on a security with weekly options, you will immediately notice a broader range of choices. Securities offering weeklies typically will have at least 5 expirations, not including the standard monthly option. Notably, weekly options are not offered on the same week as the standard monthly option, and some securities have more than 5 weekly options available to trade. With additional expirations, weekly options traders can strategically plan trades around events such as earnings announcements or economic data releases. Overtrading may also become a problem. Because of the shorter time frames of 0 DTE options, traders may engage in more frequent transactions which can lead to higher commission costs. Stop losses and the ability to modify options positions are only available during market hours. Day traders of 0 DTE options can avoid that overnight risk. However, the increased frequency of trading options can boost the risk of loss, and early assignment risk may remain. Options carry a time value that is attached to the premium. Because there is little time until expiration, 0 DTE options may have lower premiums and offer a more cost-effective alternative than trading options with more time till expiration. This assumes that the shorter expirations are suitable for your strategy and risk tolerance. Let's examine some inherent risks associated with trading 0 DTE options, which arise primarily from the shorter trading period. It's important to note that all options, not just weeklies, can be 0 DTE when traded on their expiration date. Options are a wasting asset. They drop in value as time passes. Theta measures the expected decline in an options premium for a one-day passage in time. Since the 0 DTE option expires on the same day, its time value decays quickly throughout the trading day. Debit option strategies have negative theta, as the accelerated time decay could counteract potential profits. Option sellers who create credit strategies have positive theta and may benefit from the time decay inherent in 0 DTE options. An options delta is the expected rate of change of the options premium for a 1-point change in the underlying price. Delta is not static. It changes with the movement of the underlying price. The measurement of that change is gamma. An options gamma calculates how much the delta will change. A higher gamma will adjust the delta and the options value faster. Gamma tends to increase on options as their expiration date approaches, resulting in higher gamma for 0 DTE options. This heightened gamma means that the options are more sensitive to price changes in the underlying. Additionally, gamma is affected by the moneyness of an option. At-the-money options have higher gamma compared to options that are further in or out of the money. Traders of 0 DTE options may not be prepared for substantial price movements, underscoring the importance of understanding these risks before engaging in such trades. The expiration, exercise, or assignment of 0DTE options is like standard options with some exceptions. The action will depend on several factors, such as the option type, whether it is a call or a put, and the option's moneyness. The option type refers to whether the underlying is physically delivered upon assignment or if the options are cash settled. Options on equities and ETFs typically involve physical delivery, while index options are cash settled. At expiration, all options in the money by at least a penny are automatically exercised. The option sellers face assignment risk. At or out of the money options expire, and the seller retains while the buyer loses the premium collected as profit. The style of the option is also a factor in the timing of the exercise or assignment. For American-style options, buyers have the right to exercise at any time before the option expires. At the same time, sellers face the risk of assignment at any time up to and including the expiration. In contrast, European-style options are only exercised and assigned at the option's expiration. In summary, 0 days till expiration or 0DTE options are options contracts set to expire at the end of the trading day. Every options contract becomes a 0DTE on its expiration date, whether issued months before or the prior week. Weekly options are often used for trading 0DTE strategies since they offer additional expirations. Traders may use those additional expirations to create strategies to target specific events such as earnings announcements or economic data releases. They must be careful not to overtrade with the additional expirations. Traders with a strong understanding of the risks of trading complex instruments might try to generate income by trading 0DTE options. Because of the more advanced nature of these products, an option level of 4 or above is required to trade credit strategies. Due to their short lifetime, 0DTE options have high gamma and theta. The elevated gamma could make the options more volatile and subject to significant price swings. Meanwhile, the large theta causes time decay that could offset potential profits. With a thorough understanding of the risks, TradeStation clients can harness the power of OptionStation Pro to evaluate and trade various options and strategies on 0DTE options. Before trading, practice in simulated trading mode on TradeStation to build confidence without real financial exposure. Explore additional training and elevate your options skills by tapping into the comprehensive resources within the Options Education Center.